Hi, it's Dave. Today I'm joined by Garry Tan. He is the co-founder of Initialized Capital. Previously, he was a co-founder of Posterous and Posthaven, a partner at Y Combinator. And recently, one of his earliest angel investments was Coinbase. He put $300,000 into it, ended up turning it into over $2 billion at the time of Coinbase IPO. I just want to welcome Garry Tan on the show. Welcome.
Thank you so much for having me. Big fan.
Yeah, awesome. I'm excited to have you on the show. I know you have a YouTube channel as well. I'll go ahead and link that in the video description. I'm curious, why YouTube? I mean, I'm sure you're busy with a ton of investments running your VC firm. What potential and kind of, possibilities do you see with YouTube?
I think that basically being able to spend time with tens of thousands, if not, for you, hundreds of thousands or millions of people every single week, how powerful is that? And to be able to teach people that they can participate in our financial economy, to teach them that, hey, maybe you weren't meant to have a job. You could actually probably start a company yourself, and here are the lessons. That's what I'm trying to share. And how cool is that? Look at what Mr. Beast is doing. By doing his videos, he's able to make a burger chain that is more dominant than McDonald's. Isn't that crazy? So, I think YouTubers and YouTube people are now really realizing what YouTube could be. And that's where I see it, going from 0 to 120,000 subs in 2 years. And it's already having a really big impact on my business, because I want to be able to lift up the startups that I think are genuinely going to go change the world. And, the YouTube channel is sort of like, you have my axe. Like, people have already raised tens of millions of dollars in financing from interviews that I did with my founders, or they've hired executives, or they've actually even doubled their customer base off of the videos I've made. And so if that's not powerful and accretive to any investor, I don't know what is. It's been amazing to me. So I'm sure the same transformation has happened for you in your life as a YouTuber.
Yeah, I think the earliest examples in my kind of recollection is like Fred Wilson and Paul Graham. Like, they were one of the few first kind of pioneer VCs who put themselves out there with Paul Graham's, his writings, and Fred Wilson's, his daily blog posts, to kind of just really help people get to know them. And that opened up a whole world of founders, trusting them. And I think it seems like YouTube is the next generation, face to face, really engaging with people. I want to go into your Coinbase investment, head into Ethereum, crypto, but I also want to dive a lot into your investment philosophy. I want to see, like, if you could share some really valuable insights that will open our eyes to, what the key principles of investing that you've discovered. But first, on Coinbase, I'm curious. You put $300,000 into it as an angel investor. Are you still holding Coinbase as it went IPO? Did you hold all of those shares, or did you exit at all? Like, what was kind of the story along that?
Yeah, so obviously our funds have done distributions to our LPs, and then our limited, I'm a VC, so I'm actually investing on behalf of endowments and institutions. And then in terms of my personal book, I've sold a little bit in terms of just diversifying, because this is my biggest exit as a VC. I've been doing it for 9 years, but the carry checks take a long time to get to in venture capital. Our funds are closed-end funds that last 10 years with, multiple 2-year extensions. It's not uncommon for 14 years to pass by for exits to finally happen. So if anything, this is a little bit earlier than schedule. But, the majority of what I hold, I'm holding because Coinbase is really sort of that Google or Facebook of crypto. It is, the HP. It is the place where the top engineers are going to come and continue to build the future. And I think the future is extremely bright for what Coinbase is and what it will be in the future for the space.
How do you define, like, the bull case for Coinbase in, like, a nutshell? Like, why are you still holding on to the majority of your shares? I'm supposing, like, you still think it's early innings, right, for Coinbase, huge market potential. Like, why do you think Coinbase is kind of going to be one of those defining kind of companies in the crypto era?
Yeah, absolutely. Well, first you have to sort of think about what era are we in crypto broadly. And I think that there are sort of 3 things that are happening simultaneously. The first one is the store of value. And so that is the thing that is farthest along. A lot of the people who are participating, they're participating for the increase in value, the sort of inflation hedge that Bitcoin in particular might be. And I think that that's just a little bit further along. But that isn't the only. And when people say crypto, often they think, oh, that is all there is when it comes to crypto. And I think that that's just the first. I think it's plenty big. I think it's, if gold is many, many trillions of dollars, then crypto is at around 2 trillion. And, it's farther along than most in terms of the trends. The ones that I think are really interesting that are really just coming online right now are, for instance, decentralized finance, the ability to do all of centralized finance, settlement, security tokens, lending, insurance. All of these things are now online and growing very quickly. At the end of about a year ago, all of DeFi and Ethereum was about $1 billion. I think last I checked DeFi Pulse, it was something like 70 or 80 billion. So it's relatively rare to have that kind of growth period. Anything that can grow 70 or 80x in a single year, I think we're still very, very early innings. I think a lot of the critics say, hey, this is, it's a lot of speculation still, right? And to that, I would say you're right because it's so early. But things like what happened with GameStop not being able to properly settle on Robinhood, that kind of thing doesn't have to happen with a decentralized settlement model. So it wouldn't surprise me that in the next 5 or 10 years, some of the things that are coming down the pipe they might replace pink sheets first, for instance. I think that's where a lot of the world and a lot of the smart finance folks that I hang out with, that's where they're thinking. DeFi and all the things that are centralized can become decentralized. They're going to become better, faster, and cheaper. And it's already happening on Ethereum right now. And so that's sort of the second wave. And the third wave, I think, is one that I'm extra excited about, but we are so early that I hesitate to even talk about it too much. What I think is next is actually the decentralized autonomous organization. So, for instance, a good example of this might be Research Hub. I could see something like Research Hub, which is both a tech company and decentralized, autonomous org that has a crypto token. Something like that could eventually fund research that rivals that of Oxford, Harvard, or Stanford, or any research institution, because there's economics, there is a culture and a community of smart scientists who could rally around it. There would be brand effects that actually basically make it the dominant place where people want to publish. If you can line all of those things up, these sort of decentralized, these organizations that are not centrally controlled, with a full sort of blossoming of the crypto ecosystem, they could actually really rival that of centralized institutions today that, frankly, need to be disrupted. Frankly, some of them they're becoming so decrepit, they actually need to be replaced by something that could be governed by software. So I don't know. That's a really long answer, but I think that's the role that Coinbase sort of has to play on all of those fronts. It's the on-ramp and off-ramp. So a lot of people look at the exchange and the exchange fees. I think that people who worry too much about the exchange fees right now are really saying that there is only one epoch, that there is only one part of crypto that matters, and that is the store of value and the pure speculation. And if you told me that we would be sitting here with Bitcoin at $40,000 to $60,000 wherever it is now, I would be shocked. When I funded Coinbase in 2012, I didn't fund it for the speculation. I funded it for this idea that stage 2, something like decentralized finance, and then stage 3, the truly decentralized autonomous organization, that was going to come to fruition. And I think you can see this in the through lines on a lot of the things that Coinbase is working on now. They released a fully decentralized wallet, for instance. And that's really important right now because for that third step, being able to have a UI. Today, a lot of people use MetaMask, but I don't think anyone is really going to expect that MetaMask is what we're going to be using in 10 or 20 years. It will be something that is far easier, far simpler, far better sort of integration with your existing bank accounts. And literally, that's what Coinbase is. It's like the clean, well-lit place that allows you to participate in this totally new economy. And so owning things like wallet, it ends up being your identity. So it becomes like your Facebook identity in this sort of new decentralized marketplace, right? And I don't think that's the only thing. Looking at things like BitClout, I think those are fascinating experiments. I don't think BitClout is that likely to be the final version of what ends up replacing Facebook and Twitter, but it is a proof of concept. And so I liken it to 6 Degrees. I don't know if you remember using that, but that happened even before MySpace and even before Friendster. And it was sort of the prototypical social network. The idea was that every person on the planet is separated by 6 degrees. And today, the full manifestation of that idea is, of course, a multi-hundreds of billions of dollars, perhaps trillion-dollar company that is Facebook. And I think that the proper realization of decentralization of what crypto represents will actually eat all of that value. If we have choice, why would we allow big tech to have that much control over us? And then to me, decentralization is the good news, because you don't have to. Like, you could choose your own computing environment. And I think that that's where all of this goes. If you focus on just the exchange fees right now, it's a great business, honestly. Like, the profits are fantastic. But we are in sort of the first inning of this very long ball game. And so, the score looks amazing, but wait till you see the end.
I want to get your thoughts on Bitcoin and Ethereum and some other thoughts on crypto. As you're talking, I'm reminded of just one of your first kind of startup ventures, which was Posterous. I was actually a user of Posterous back in the day.
For using it. Yeah.
And I was kind of sad that they got acquired, I think, by Twitter, right?
And sorry, we couldn't see that to the promised land.
Yeah, exactly. And you mentioned kind of this whole thing of, there are early versions, right? You have MySpace and 6 Degrees. You have all these early versions of what Zanga was the hit. I don't know if you remember back in the day.
I met my wife on Zanga.
Really?
It was funny to start a blog platform later, because blogging really, is a critical piece of my life.
Yeah, that was huge. But then oftentimes the initial first versions, they just kind of prove out the proof of concept, that this is, legit. But then there could be later players who come in and kind of really come up with a differentiated, unique, compelling product that just gains network effects, et cetera. With crypto right now, do you think Bitcoin and Ethereum have escaped kind of that whole competitive threat from others? Or do you think we're still so early in the ball game, in the early innings, that everything can be disrupted, everything can be changed, in 5 or 10 years? What are your thoughts?
Honestly, I'm sort of two minds, because obviously I hold a lot of Bitcoin and I hold a lot of Ethereum. And I encourage people, when they first start getting involved in cryptocurrency, usually they are attracted by the shiny object. And the problem with the shiny object is the majority of things out there you will not hear of again in 5 to 10 years. But Bitcoin and Ethereum are highly likely to still be around, but never say never. The incumbent is always subject to basically disruption, right? Something could come along that is far better, faster, and cheaper. I think that Bitcoin at this point is, the most sound money. And so I actually think there will be a role for Bitcoin no matter what. There will be so much miner activity. There will be so much mind share there that as a store of value, I actually believe that Bitcoin will be durable. And my pitch for Ethereum is that there are so many developers who have actually built on top of it. The thing that I would be most concerned about is if and when the developers who grew up and built all of the things that created DeFi, that $80 billion in the DeFi ecosystem, the way to tell if Ethereum is going to not make it and, sort of lose its mind share to some other upstart, it'll be where the developers go. And, I think that there's some indications even now that that thing to look out for is Solana. I think that Ethereum is different in that Bitcoin is static. Ethereum, on the other hand, is clearly growing and changing and responding to the marketplace. I don't know if you saw Vitalik Buterin talk about this new meme that some folks on Twitter came up with called ultrasound money. But I think that that's amazing. What Vitalik said was that that would ultrasound money as a concept. EIP 1559 is coming in July. It's going to turn Ethereum into ultrasound money, meaning they will actually burn hundreds of millions of dollars worth of Ethereum every single year as a part of a fee burn. And so, theoretically, just as Bitcoin will hit only 21 million Bitcoin in existence, period, and that's enforced by the code. This is more theoretical now. Ethereum might only have 120 million Ethereum tokens, Ether, in the world, period. And that's basically going into the main line in July, and that's really soon. So I think Ethereum is much more agile because they've got a foundation, they've got a large set of core members, and there's a community that can sort of meme things into existence, which is increasingly very important for crypto. That being said, I think that a very solid and very interesting trade right now is to focus on also what are those Ethereum cult killers and which ones are the ones that developers will choose. And I think I would be very, very careful to focus only on what developers care about. Don't focus on what sort of Reddit is saying or what Twitter is saying. I think my whole career has mainly been about how powerful code is, and code is being built by the developers. So they are sort of choosing our destiny in a lot of ways. In the same way that I met Brian Armstrong when he was still an engineer at Airbnb. And he quit his job to go work on crypto. That was what sort of spawned the ability for an entire new generation of crypto engineers to really focus on that new space. That's my secret at the end of the day. Like everything about my fund and everything about my crypto investments really just come from what do the software engineers who could build anything, what did they choose? What platforms do they choose, and what do they choose to build?
It's interesting. You talk about developers and software engineers. So I've also been, a longtime fan of Hacker News. It was actually kind of the place where I discovered Elon Musk and Tesla back in like 2010, 2011.
Me too.
And and I followed, a lot of the discussions and the topics of interest from perhaps some of the smartest developers in the world. It's curious, though, that on Hacker News, for people who don't know, this is news.ycombinator.com. It's kind of a Reddit-style news board for software developers and entrepreneurs. But I've noticed that over the years, like crypto wasn't really one of the main topics. It kind of went. It was just kind of, I don't know, pushed aside. But by following just Y Combinator news or news.ycombinator.com, like I don't know if people were able to grasp how big crypto was becoming, and I mean, what do you attribute to that? Do you notice that at all? Did you see that? And
yeah, absolutely.
Yeah, and then what was the takeaway?
I worked at Y Combinator for many years. Briefly, Paul Graham entrusted me with the mantle of moderator of Hacker News, which was fascinating to see.
Nice.
In the end, I don't think I was impartial enough to be able to do the job. What's fascinating about that community is that it is full of absolutely brilliant software engineers, but over time, it's a votable list paradigm. So what that means is anyone can vote things up or vote things down. And like it or not, over time, what's happened in that community is that crypto itself has become just vilified and basically pushed out. And I think that points to how religious crypto actually is. And, what's interesting about being an investor is it is most useful to be agnostic when you're an investor. That's how you can sort of most easily take advantage of all the possible trends and all the ways that you could take advantage of the market. And at the same time, though, it's very hard to resist religion. And so Hacker News in particular, not unlike Wall Street Bets, has taken a very anti-crypto stance because I think that that's what these groups have to do. You know, you have to sort of maintain a very strong wall of insider versus outsider. And the lucky thing is, just because Hacker News hates something, often it doesn't mean that it's impossible for you to succeed. In fact, sometimes when Hacker News truly hates you, it means you're inevitable.
It's interesting. Yeah. Just a few months ago, I emailed the moderators of Hacker News. I'm like, what's going on? Like, is there a downvoting algorithm for Bitcoin, Ethereum, like crypto words, right?
Oh, it's not the algorithm, it's the people.
Yeah, and they're saying, no, we don't have any, built-in algorithm stuff. So I'm like, that's strange, that, I think the crypto, conversation was somewhat, I missed it if, it was just looking at Hacker News. I'm curious, in your case, have you seen with developers, like, are these, the developers who are involved with crypto, are they kind of like a different breed of maybe the previous kind of generation of developers? Do you see any kind of distinctions?
Honestly, like the pure skills are very, very similar. But I think the main difference is whether or not you've got that religion. And so I'm speaking as someone who is like partially crypto converted, but then 80 or 90% of my investments from my venture fund are still non-crypto. And so I guess you're talking to a true agnostic about these things. Like, I believe that crypto is basically inevitable, but I also feel like the impediments to broad adoption are still there. And we're still sort of in 1992 land. We don't have broadband. Nobody's even really invented HTTP yet. People are sort of cobbling together access to the internet using literally like teletype and 2400 baud modems. We are sort of at that stage of development. And maybe if it's 1993, you could sit there in front of your teletype machine, like using Telnet and using Gopher maybe instead of the web, and you could say, hey, the internet's going to take over the world. And you could even posit that we will have a global brain like Facebook, but people will look at you like you're mad, and nobody's going to go work on that at that moment in 1993. But hey, 1998, 2003, you got the web browser, you got millions of people involved, like all things are possible. And so that's really what I'm looking for. Like, I believe that these things will get there, but the time scale might be 10 years or 20 years instead of 2 to 5. And so that actually makes it hard for me as a venture capitalist to go all the way in on crypto, because I know how much infrastructure needs to be built as well.
Yeah. Recently you've mentioned that you think Ethereum is headed to 10,000. Is that more of like a variable time frame? Are you thinking it's in the short term or more medium or longer term?
I would be looking to basically, when is proof of stake going to go into Ethereum? When will we have, actually EIP 1559 all the way live? It might be July, it might be August. These things are all sort of up to the developers, and it's up to whether or not these things actually make it and are working the way that we want them to. But I think that Ethereum is one of the most dynamic, most distributed sets of developers there are, and they're very, very pragmatic. And that's actually sort of the feature of Ethereum. So that's why I'm bullish on it.
I'm wondering, so I want to push back just for the sake of learning,
Please,
like, for example, on Ethereum. I get the overall vision, and it seems like there's potential to become an alternative economic system, like taking on all the inefficiencies of traditional finance, running on software, smart contracts. And we're talking about trillions of dollars of potential. And it's pretty obvious that, like, the use cases are being proven out, lending and borrowing, et cetera. But in terms of valuation, we're looking at, Ethereum being worth over 400 billion, Bitcoin worth over 800 billion. Like, how do you make sense of this? Like, is there a way to where you're thinking, hey, how do you value Ethereum right now? Is it worth 100 billion? Is it worth trillions or somewhere in between? Do you have any kind of framework or grid to kind of get you a sense of grounding?
Well, I mean, I live in San Francisco, and is a 2-bedroom apartment worth $2 million in San Francisco when it could be bought for 200,000 or even $50,000 in most other parts of the world? Um, I'm not really the expert to ask about valuation per se, because if you ask me, there are asset price bubbles absolutely everywhere in the economy. Um, and I think we're still making sense of it. Now we're on the other side of, do we have inflation fears? And so that's roughly where my head goes when people ask about crypto valuations. I think that there are a lot of things that don't make sense in our economy, and they're distorted by, perhaps government action. Right? We've printed an outrageous amount of currency in the past year or so, and rightly so. I don't think anyone wants to sign up for a global pandemic and a global financial crisis. So on the one hand, the systems are working as intended. On the other hand, the value of a dollar has shifted so much that I don't know what that says about Bitcoin and Ethereum or crypto broadly, or does it say more about the value of a US dollar?
Got it. You mentioned Solana briefly. Are you kind of monitoring any other Ethereum potential, competition like Cardano or Polkadot or Algorand or Tezos or a bunch of these others out there? And if so, how are you doing that? How are you monitoring them?
Yeah. I mean, I'm making very small buys in a basket of these right now, and I figure if they work, they're going to work great. So, I think the number one thing for crypto broadly is do your own research, try to meet people who are developing software for those chains. Some of them, like ADA, I'm not really sure. I haven't really been able to find people. Some of them, like Solana, I know really smart people who are already working on it. If anything, I bought too late, or I haven't even bought any yet. I'm like, shoot, I've been trying to find a good entry price. So I think Tezos is super interesting. That they've been an example of proof of stake working very well. And so, interested in Polkadot, interested in Dfinity, and sort of ICP. But the reality on all of the rest of these things is you should sort of almost treat it like a highly speculative investment that is likely to go to zero. I think that it's just, and I think that that's the right way to treat crypto broadly. Like, never ever put more than you can afford to lose entirely, because it's very, it's crazy. It's crazy out there.
It is crazy. Yeah, every week is crazy. Any kind of Twitter accounts or newsletters or people that you follow to help you make sense of what's going on in crypto?
Yeah. I mean, I really love the work of, Masari out there. I think that Masari is doing an incredible job of really, breaking it down. But there's so many great places for a lot of really deep, just work out there. I mean, I don't know. On the Ethereum side, I love Rick Burton. He's a great designer from Stripe who came up through Silicon Valley and then is a great translator of what's going on out there. And then I love the Bankless. I mean, Bankless has a great YouTube channel, and they're really has been doing great work. I think the thing that sort of spawned ultrasound money as an idea, that actually came from their interview with Justin Drake. So, that I think that there are a lot of interesting memes that are pushing things forward. And hey, it's happening on YouTube.
Awesome. So you've been obviously successful in some of your early investments. At what point, do you question, have you ever questioned, why do I continue to do what I do? Because there's pressure, you have people on your team, there's expectations. Is it ever a temptation just to say, hey, I'm going to kick back, just want to rest for a few years, read some books, hang out? I mean, I guess the bigger question is why invest? Why keep pushing on and pushing through?
Oh God. I mean, I think it's just exciting. What I realize now, I honestly, for me, I grew up at times food insecure. And, we lived in 1 and 2 bedroom apartments in the Bay Area. And I credit living in the Bay Area for cultivating my love of technology. And I remember going to Barnes and Noble, and I, didn't have money to buy the computer books, but I would sit there and read about how to make web pages. I'd read, how to write my first Java program, sitting there at Barnes and Noble, and then I'd go home and I'd try to look up the API docs and figure out how to do it. And I got my first jobs that way. So, to me, technology really brought me out of, the more or less nothing. I don't know, and that's what I want for everyone. Like what I now believe very deeply is that everyone has a hand in pushing forward society, particularly through technology. And that doesn't mean everyone has to code. That doesn't mean everyone has to learn to be a PM or a designer. There's sort of a role for everyone in that, right? There are roles for storytellers. There's roles for people who make media. There's roles for just, anyone who wants to push things forward that way. I mean, I don't know. I mean, so the thing that really astonished me coming into the world, working for, I worked for Peter Thiel at Palantir. I worked for Paul Graham at Y Combinator, and I became an investor. And what I realized along the way was that the world is actually full of money, which is really strange. I mean, that was new to me. I was like, oh, there's never, there never seems to be enough money out there in the world. What does it mean when there's a crazy amount of wealth, when 25% of all US dollars get printed in a single year? What does that mean? And what I realize now is investing is the way that money goes from sitting in a bank account, letting someone else kick back, to actually someone else who wants to sit in front of a computer or wants to sit in front of a desk and draw the next rocket that will take us to Mars. That's where people convert this sort of kinetic energy, and they turn it into something that solves real problems in the world. And I get excited by that because we're seeing people do that every single day. And it doesn't have to come from a point of just wanting money or more and more money. It can come from a place of genuinely trying to help people with the things that they want and need. We fund companies like Landed, for instance. So this is a fintech company that is bringing, sort of shared equity loans for teachers, for police officers, for firefighters, for nurses, for people in our essential communities that cannot get a normal bank loan to get a down payment. They cannot afford a down payment. And so they can come into these communities and help them do that. Exactly. And they do it by being a great business, actually. Most mortgage brokers and sort of that whole fintech world, they're spending hundreds, if not thousands of dollars in order to get an originated mortgage. And, what Landed can do by offering this service to people who can't usually get it, and it's backed by the institutions that, actually employ them. That simple thing that they figured out is putting thousands of teachers into homes that they wouldn't have been able to buy otherwise. And, that's what gets me up. It's like, we don't have to just go out and do totally zero-sum things. We can go out and make growth mindset things. We can actually go and make these things better. And when we hear a pitch that's like that, I think it really invigorates us. And I think that's one of the surprising things about investing. I think a lot of people look at it and say, I have to only fund the things that are Sparta. I must only do things that, possibly make the world a worse place. And, to be frank, if that were true, I would have retired a long time ago. There's just no reason to get out of bed for that kind of thing if it's all zero sum. I think it's actually extremely growth mindset. You can go out and solve problems and get people to go do that, and that's why everyone needs to think about becoming a founder, honestly.
At your firm, Initialized Capital, so you guys are generalists, early stage, right? I think you've made investments in Instacart, Patreon, and a whole host of other companies. How many people are on your team, and how much capital do you manage? Just curious.
Yeah, so we have 7 partners right now, and we manage over $1 billion, just over $1 billion in capital at this point. And I started with zero in 2012. Actually, that first investment into Coinbase was in 2012 out of a tiny $7 million fund, and we didn't know what we didn't know. So the cool thing is, running a venture fund to me has become my startup, and it's been really fun.
Yeah, awesome. I'm curious, how much has geography played a role in kind of your success as an investor? So you grew up in Silicon Valley, close to tech. You had an early job, I guess, with Palantir, with Peter Thiel. You started a company, Posterous, also ended up at Y Combinator, and you're just in the proximity of so much innovation, and so much of the mentality of taking risks and putting capital behind great startups and founders. Like, how much of just being in the right place at the right time has played a role in kind of your formation and just the decisions you made and the relationships that you've been able to make over time?
Honestly, so much, right? Living in San Francisco and the San Francisco Bay Area, it really reoriented my worldview. It's no mistake that San Francisco is actually leads the country in socioeconomic mobility, and it's because people have opportunities here that often they do not have elsewhere. That's changing, though. I think that one really good consequence of the internet, especially the past year, is that we're finding that you don't actually. 10 years ago, a startup would get started in the Bay Area, move to another city like Denver, and it would die because there weren't enough smart people out there who were all working hard to teach each other how to start these companies. I think all of it's moved online, and so you can get so much information from YouTube, from Hacker News, from Reddit. Again, even blogs, right? Paul Graham's essays and Fred Wilson's essays are all online for everyone to see. Naval Ravikant just gives away wisdom left and right every single day. And so what was true 10 or 15 years ago when I came up, I think it's a whole new ball game now. You could be from anywhere. But that being said, if people are watching this and they have never come to San Francisco, come. I think that we will have a second renaissance here. The big tech people, the people who basically don't have to be in the Bay Area anymore, a lot of them are going to leave. But increasingly, I am already seeing a new generation of people who are leaving, coming here, and they're forming the new networks, on the ground here. It's that or Miami, I guess.
Yeah. I want to ask you about your investment philosophy and try to pull out kind of some crazy value in terms of your insights. So what would you say would be your key insight in terms of your unique angle on investing, your kind of competitive advantage, the thing that you kind of latch onto over and over again, making investment decisions?
Well, I guess I think the number one thing that I really fall back on is my own experience, being a software engineer, being a designer, being a product person who had to build things. And actually, I really enjoyed doing it. You mentioned Posterous, who does simple blogs by email. We built it from zero to a top 200 site on the internet. And I guess I'll never forget how empowering that experience felt. Having worked at Microsoft, I was 9 levels down from the CEO. I had 20 bugs that were my entire universe. And then I had maybe 1 or 2 software engineers who would fix those bugs. And that was my day to day. And to go from that to being a team lead, to be able to build software from scratch, I didn't really have a boss at that point. And especially when I started my company, there was no one looking over my shoulder. And so what that meant was that there was nobody to sort of hold me back. I could go directly to my user. I would get emails from users saying hey, this is broken. And I would just go in the code. I'd fix it, and then I'd roll the fix, and I'd say, hey, it's fixed. And then I would have someone who, even to this day, is like, hey, thanks for fixing that bug for me. I think we forget about tech. We think about tech as this giant machine, but I don't think it has to be like that. I think it can be like very direct and very personal. And that's actually what I'm looking for in the founders that we back. When I met Brian Armstrong, he was exactly like that. What actually stood out to me was that the recommendation that got sent to me was from another founder who we worked with and I funded, named Garry Tan. He created Sift, which is an anti-fraud platform. It actually just got to $1 billion status recently. And the email said, you need to meet Brian Armstrong. He and I were up until 2 a.m. last night debugging my software. And, he didn't have to do that. He just loves this stuff. And for us, we invested in Coinbase at 15 cents per share. USV invested at 20 cents. Andreessen and others invested like all the way up the line. I think the later stage rounds were $10, $15. And of course, now it's sitting at, mid 200s right now. So, I mean, that is the power of being super early. It's before traction, but I did have a demo. I did know that this founder was, had the right builder mentality. And when I meet with founders, I just try to identify that. I try to say, would I go work for this person? If I wasn't working on what I'm working on right now, is this someone pointed at a direction that matters? If we achieve what this person is saying, what happens? And so for Brian Armstrong, it was like Satoshi Nakamoto's vision is to be something that fundamentally changes the world financial economy. And at that moment, it seemed very, very unlikely that that was going to happen. But we said, this is the right person, and that this direction, if it happens, it will push forward society in a way that we want to live in that world. And so I would choose to work for that person. And that's really worked pretty well, honestly. I mean, we met Jack and Sam Yam from Patreon. They were college roommates, actually. Jack Conte was a YouTuber, actually. And, he had a band, he had a YouTube that was very popular. And he said, monetization for artists is terrible. And Sam was a great engineer, and the two of them had sort of that 1-2 punch. And, they had basically a demo and an idea, and we said, these are the right people to work on this. There's not other people who could do this. I think Flexport in the same way, looking at, Ryan Peterson had actually become one of the biggest importers of, I think it was medical hot tubs and electric bikes from China. And so he very directly had experience with how arcane and frankly stuck in the Stone Age import-export and logistics were. And that's why he had to create Flexport. And so, at this point, we've zoomed out and said, every part of the economy is going to be remade with basically the software that is what you expect, right? Every single day, there's someone who goes out into their job in their workplace today, and maybe they open an Excel spreadsheet, but sometimes they're literally still picking up a clipboard and a paper and pencil, and they're literally doing transactions worth, hundreds of thousands of dollars, millions of dollars. And then they'll go to lunch and, they'll take an Uber to get there, and then they'll take out their phone and take a photo of their lunch. And it's like, that software is so easy. And then they go back to work and there's no software at all. And so I think that that's one of the easiest things for us to sort of see over and over again. Crypto is software eating money, but software is eating absolutely every part of this economy. And it's actually still very, very early. And so that's the most important thing. It's like realizing, hey, like we have a hand in this. Like we can actually change it. And I think that's what we get to see every day.
I noticed you mentioned before that you like to invest prior to product market fit, which is a little bit unusual in the sense that a lot of people want to wait for that, the traction and
there's plenty of people who do that.
Exactly. And so you're looking at earlier stage, and you're talking about how software engineers are remaking the world. You want to get behind those that you can really put your weight behind. How do you determine whether or not this person with the demo who talks the talk, and all founders, like, one of the best things is they're gonna give that pitch where it's like, we're gonna remake the world, where we have some multi-billion trillion dollar total addressable market, and it all sounds perhaps very similar and shiny, and they all have credentials, and all of this stuff. How do you decipher and distinguish between those who are mostly talk versus those who are the real executors, the real builders? Are you looking at what they've built before? Are you looking at their character? Are you looking at other types of angles? Like, what's your kind of approach there?
Yeah, I mean, frankly, I look at the demo. Brian Armstrong sent me 0.05 Bitcoin on bitbank.is, and he basically built it. He built Coinbase, he called it Bitbank, and it was working. He wanted to figure out, can I have a web wrapper on a Bitcoin wallet and have that work? And, even if he had to duct tape it together, he got it running. And he immediately distinguished himself beyond sort of the hundreds, if not thousands, of other people who all had this crazy idea, but A, they couldn't build it, and B, they weren't willing to do the work to actually create the first version. Same thing with Apurva Mehta at Instacart. So Apurva actually sent me a 6-pack of beer using his service, and that's what got my attention, because in 2012 there were tons of people trying to make the next Uber for X, Uber for grocery, but this was the only person out of probably dozens of people I ran into who was not just full of hot air. He had built the driver app, he actually had inventory data, and he could take credit cards, and he actually hired 2 people off of Craigslist, and I actually got to use it as one of the first 100 people on there. And I have one other story that's crazy, and it's a company called Shelf Engine, which I think will be a unicorn soon. And it's like just such a crazy story. So I was friends with the founders. One of them worked at Microsoft. Another of them ran a packaged food company. It was like a sandwich brand, actually, and they were doing about $5 million a year in sales. And he figured out that because of their food ordering methods, it was literally someone with a clipboard saying, like, well, we need X number of pieces, X number of loaves of bread, we need this much ham, etc. He asked his friend, hey, could we start working on something that really matched demand to supply so that I actually order the right amount and I don't waste it? And what he was pointing to is, like, believe it or not, 30% of all perishable food goes in the garbage in the West. And it's absolutely insane. I mean, can you imagine, like, 1 in 3 pieces of like the apple, the banana, the sandwich, all of those things are just landfill. And so he said, could I fix it with software? Him and his friend did it. So they actually put $1 million of profit on their $5 million a year business. And then they came and showed me the software they built. And I said, yes, this is it. But the crazy thing about Shelf Engine is they went off, and it actually still took many years after that to figure out that you can't go to grocers, you can't go to a Safeway or a Kroger or even a Walmart and say, pay me $5,000 a year for the software, because they don't want to take the risk. So it took another innovation later. They figured out that, hey, we're going to take all of the risk for this entire aisle. Whatever you paid for this aisle last week, pay us 5% less than that, and we'll just take the spread. And so what they've done now is something that is reducing food waste double-digit percentage in all of their customers. It's actually putting percentage points of profit on retailers like Kroger. I think vegetables are 1% or 2% cheaper in the LA area at Kroger because of this software. And so I mean, that just blows my mind. They're expanding to Target, to Walmart, and all of these other places. And I'm like, that is such a crazy story. It's like lying in plain sight. Like, how is it that people were just still using paper and pencil and clipboard? It could just be replaced by, really good software, and then someone who's willing to take the risk. Like, that, it's a new form of fintech to me called, I'm thinking it's basically outcomes as a service. Like, people don't want to buy software. They want to buy the outcome of that software. So now companies like Shelf Engine are actually doing it.
Awesome. I want to ask you about one last question. Do you have any expectations on your returns? Like, for example, on the capital, are you expecting a certain percent or certain like multiple, returns after a certain number of years? And also on your investments, when you're making these early stage investments, are you expecting a certain percent just to go belly up,
Yeah.
right? And
Yeah, absolutely.
what's your mind regarding that?
Yeah, the thing about early stage, and this is the thing that is the hardest for people to sort of adjust to, is probably a majority of companies don't make it all the way, right? They are 0x to 1x. Like, we're lucky if we get the money back and the company gets sold to someone. And I think that that's actually the model working. If we had a lower a lower failure rate, it would mean that we're not swinging hard enough. And the cool thing is it's working. I mean, that first fund where we invested in Coinbase at a $9 million valuation, we were able to return more than 50x distribution. And so I got letters from my endowments and my foundations and the people who, believed in us, gave us money very early. I just like increased the size of their endowment by a significant percentage. Their trustees are like, where did this money come from? And it's like, oh, look at this IPO. And so, I can't guarantee a 50x every time. I think most VC firms are they are good, and they get to keep doing it if they return 3x net, which usually takes a 4x gross return over 10 years. But I think that we can do a lot better than that, and that's what it's tracking to these days. So I've been having lots of fun being a VC. I kind of can't believe that it's actually a job.
Awesome, man. Garry, it's been a pleasure chatting with you, getting to know you, your investment philosophy, and just your thoughts on lots of different topics. I appreciate it. I'll go ahead and link to your YouTube channel in the video description for those who want to follow up, and also link to your Twitter account also for those who want to check you out on Twitter. Again, thank you, and hope to catch you again at a later time.
Thank you so much, Dave. Be well.
Thank you.